Hello everyone. Good morning, good afternoon, good evening, good day. So before the spring break, we start to look at chapter 5, fraud, internal control, and cash. I think we went probably halfway through it. So today I will spend some time to look at the remaining part of chapter 5. So first of all, to refresh, we look at three types of fraud. We have the corruption, which means some individual abused his or her power or position to take money, basically. Asset misappropriation refers to, for example, an employee stealing from the employer. We mentioned the idea of quote-unquote shrinking of inventory of a company. And then a financial statement fraud, that is, we have been learning in this course. That is, for example, we know that in the US, if you're a public company, you have to follow the GAAP, the generally accepted accounting principle rule in preparing your financial accounting statements, and then your financial statements has to be audited by your auditor. So that's financial fraud if you didn't follow the GAAP rule, or if you deliberately, say, inflated your asset or inflated your revenue, then that's financial statement fraud. We talked about quote unquote the motivation or reason why people commit fraud. We kind of divide all the reasons into three categories or three groups. You have the incentive or the pressure to steal. For example, let's say I am addicted to gambling. I max out all my credit card to gamble at a casino. Then I have a pressure incentive to steal from my employer for money. Opportunity. As we're going to see, if there's serious flaw in, for example, the internal control of a company, then some people might take advantage of that opportunity to steal from the company. Rationalization. Oftentimes, fraudsters will say, hey, the guys on top took millions of dollars. Why can't I just take another, couple grand to my own pocket? So that's rationalization. Or I would say, hey, because I am addicted, to something, that's why my behavior is justified. I can, take money from the company's coffer to cover my own addiction. And because of the three roots of fraud or reasons for fraud, the society, especially after the big accounting scandals of Enron, which is pretty much the financial statement fraud, the Sarbanes-Oxley Act, or SOX, was passed in the early 2000s to attack all the three causes of fraud from different angles. So for example, to counter pressure or incentive, SOX mandated or required mandatory prison terms for those CEOs, CFOs who committed serious fraud, and also fines. Reduce opportunities. SOS requires companies to report on its internal control and requires auditors to audit a company's internal control system to see whether it's effective. And then encourage honesty. Establish tip lines, Sarbanes-Oxley or SOX, and then Dodd-Frank later on, protect or put further protection for whistleblowers. internal, external whistleblowers, and then emphasize ethics code. For example, emphasize education about ethics for future business leaders, which are, a lot of them come from business school, current MBA students. So if you look at the curriculum of any MBA programs out there, at least one ethics course is included, so that they want to address it from the beginning. So we mentioned internal controls. We said it's important for a company to have effective, reliable internal control to prevent fraud. But in a broader term, internal control serves the following three objectives. First, to protect the operations of the company. Operations means the company needs to be able to, say, convert raw materials into finished goods and then sell to customers and then collect the payment afterwards. So internal control in place, for example, to protect the raw material. Imagine if you're running, say, a restaurant, and then you have expensive, fine cut steaks and, expensive seafood in the back. If the chef or the staff take advantage of a weak internal control system and cook the steaks or steal high-priced liquor from the restaurant, then your operation will be in jeopardy. For reporting purposes, as we just mentioned, SOX and then Dodd-Frank require public companies to report on its internal control effectiveness to make sure that the accounting reports, the financial accounting statements, are reliable and relevant and make sense to external and internal users. As we mentioned, accounting system is the information system. The effectiveness of the accounting system depends on the data, the information that goes into the system. Internal controls, or to a certain degree, guarantees the quality of the data goes into the reporting system, goes into accounting. And compliance, as we just mentioned, different laws, including Sarbanes-Oxley, now require you to have reliable internal control. Next, we're going to talk about internal control a little bit more because it's such an important topic. It related to or touches on so many different aspects, so we really need a framework. Let me jump ahead here a little bit. This looks a little bit complicated, but it's actually a picture depiction of the COSO, the Committee of Sponsoring Organization of the Treadway Commission, the COSO internal control framework, which is pretty much used by all the major companies out there. You name it, Dow Jones 30, SPF, SP 500, they all use the COSO framework. So in this framework, you have three dimensions. This side is easy to understand. You have different levels of internal control. You have your organization level. If that's a multinational company, then the whole company. You have your division level, which is one level lower. For example, you have different national offices. Your office in France, that's a division. And then in France, you have maybe 2 or 3 different units. And then under each unit, you have different functions. So that's different levels of business. And then the other two sides, we need to pay more attention to. The first is the control objectives, which you already mentioned, to ensure effective operations, reliable financial accounting reporting, and law compliance. So that's the top control objectives. And then the third aspect is the control components. what in internal control of a company. We have internal control, risk assessment, control activities, information and communication, and monitoring activities. So that's the 5 here. If we go back, we have internal control, we have risk assessment, control activities, information and communication, and monitoring activities. So let's look at the different components of internal control. Again, the 5 of them, internal control components. Let's go back to here. Control environment refers to the overall environment, the attitudes of members of the community, their attitude towards of the organization of the company, their attitudes towards internal control. So for example, I have asked you to watch the movie documentary on YouTube, All the Queen's Horses. If you have not, that's fine. You can watch it this week or next week. Actually, I put it down as another assignment for week 11 to watch the documentary All the Queen's Horses. If we look at there, then look at the control environment in the town of Dixon, then you realize without giving away too much of the documentary, there was a horrible control environment. People never thought of or never even attempt to look at particular possible internal control problems in the town. Risk assessment, the risk could come from operational side, could come from financial side. For example, if the Federal Reserve decides to raise the interest rate, which will put pressure on the company. For example, if you have capital investments, and then the cost of your project will go up if interest rate go up, and that will cause pressures on the managers to deliver results. Control activities, we're going to look at more control activities in the next slides. Information and communication. If you have internal control policies, procedures, you need to educate, you need to inform everyone in the system. And finally, in the company, finally, monitoring activities. There are all kinds of monitoring activities. For example, have an outside reviewer or auditor to look at your books, to look at your internal control system. That's a monitoring activity. Alright, because I'm using this free version of this software, it has a 15 minutes limit. So I'm going to stop here and call it section 1. I will continue with the principles and of control activities in my next recording.